a 4 gig Asus computer, so it's, you know, it's kind of run of the mill. You know, it's not the lower end. It is more of a it's a little bit more juiced up than the lower end laptops these days, but so it seems to work fine. All right, so let's get going. So the agenda for today is the clear trade, and we're going to be covering the rules for the basic clear trades. Now remember, I said last week you can find the rules in your self-paced course. You want to check your member download area, and you want to make sure you download the 10-second document. There's a document called 10-second that has all the rules. Another place that has the rules as well is in section 5, where if you click on putting it all together, it has a list of rules for the different strategies. So make sure you check section 5 in your self-paced course. And also, for those people who are not sure about different indicators, always check section 7, because anytime we add an indicator, especially if you've been away for a while and you want to find out what's the latest, just go to section 7 and read through towards the end of the chapters, and you'll see the newest stuff. Do I pay to have a seat on a server that gives you a quicker fill? No, I don't bother with that. For some of you who do live far away from Chicago, like maybe Australia, Hawaii, and those kinds of places, and you're having filling issues. I even have people in Africa who are having filling issues, especially for scalping. I don't recommend, if you're having filling issues where, you know, fills you 2 ticks later and gets you out 2 ticks later, because of the distance of where you live in relation to the actual CME. You have to remember, if you're dealing with satellite internets and those kinds of things because you're out in the boonies, remember that scalping a 3-tick scalping trade inside of a 5-tick move is not really going to work for you. You're going to have to be a trend trader if you're going to deal with those kinds of lag time. So what I do recommend, there is a service called Single Hop. I'll type that up for you so you can see it. Single Hop, if you just go Google it. Now there is of course there's a monthly fee for it, and but for those people who have problems getting filled because they're too far away, then it's worth it, especially if you're doing a lot of scalping in the futures markets. Otherwise, you might want to consider switching to a Forex side, trading the Forex markets more. So Single Hop. There's also a broker called Optimus. Now their margins are a little higher than AMP, and the rest of the guys are not as competitive, but they do provide that ability to be able to execute through a browser, through a window that fires your order straight from the actual exchange, right from Chicago. So you don't have that lag time from your computer going all the way through all the hubs to get to Chicago. So those are options for people who have filling issues because of their distance. Okay. What is Single Hop? It's basically, you just go Google them. It's not a broker. They're not a broker. They're basically a server. They give you a browser, and you basically, it's like accessing a remote computer. You're actually trading everything, the software and everything you're using, you're trading from a remote computer. You're executing from a remote computer through a window that is set up on your computer. So they'll get into all the technical issues, and it's a service they provide. All right, so let's get going with a clear trade. Now, as I said before, I created this document just to give you the short list of the long list of rules. Now remember, there's extra rules that you can follow for the basic strategies, but let's just cover the core meat and potatoes really quickly, and then we're going to do this real time. I'm not going to take too much time explaining a whole bunch of stuff right now, because I want to get the best thing with clear trading is you want to see this thing real time so you can understand all the component parts. So I'm going to show you on the replay so you can actually see it as it develops. So the first thing we want to learn in terms of the rules, you must remember these core rules you must obey as much as possible. Now we call this the clear trade because where the name came from is if we look on the left here on my, I'm using the euro market tonight because all your currencies, your 6A, your 6E, your 6C, even your 6S is in Swiss, and B is in British pound, natural gas. Those are mostly what we call the trending market. You will notice that the counter trending is not as great as the trending. As I discussed last week, I said the reason why we choose gold, crude oil, the Russell 2000, even the S&P 500 to do the counter trend strategies is because their counter trends price action tend to be just as big as the trend price action. So this is not the case with trendy markets. Trendy markets, there tends to be more price action on the trend part as opposed to the counter trend part. And the only exception to that is actually when it's time to change the trend direction, and we call that a reversal. So the reason we call it a clear trade though is because the price is clear of the trend lines. It's clear of our moving averages, which we use to follow the direction of the trend. And if it's clear of majority of the trend lines, or all of them, that's your best opportunity for clear trades. There are going to be times where it's only clear of a few of them. So if you're confused as to how many the price is clear of, as you can see here, the price is only clear of two, the 13 and the 20 going short. And at this point, the price is now clear of three moving averages. Can you see the difference? So here we are clear of 5 moving averages. Here we are clear, the candle, the actual price, the candle, the bar, is below the 13 and the 20, but it's above the 50. So it's not clear of the 50 SMA, the magenta one. Only at this point is it clear. So to help you define when is it really a trend, when is it not a trend, we further defined the rule to say that the candles have to be clear of at least 3 or more moving averages back in the direction of the 13 EMA. So it can include the 13 EMA, but the price must be clear of 3 or more. So as you can see, the circles are my trend, and if it's not clear of 3 or more moving averages, then it's what we call the counter trend. So this is actually the reversal part, the actual trend change. So this is where you will be doing your counter trend strategy that we covered last week. Is that clear? Are there any questions about that basic principle before we move on? What was the name of the room? I'll come to that later, Jim. You missed it. It's single hop. Okay, so come on, you guys gotta pay attention here. I don't want you guys writing stuff down too much, because then you're not engaged, right? You're missing the gold nuggets. Your brain has the ability to retain a lot more than you think. So I'd rather you put your pens down. You're not going to be able to understand your notes later, I assure you. Just be engaged. Come back next class. Be engaged again. Go practice, and you will connect the dots. Okay, so the next thing, what qualifies a clear trade is you must enter on a touching candle or the very next bar. So as you can see here, this candle is touching. I can enter my trade on this candle or the very next bar. Now I could have entered down here as well, because that candle's also touching and the price is clear of 5 moving averages. But let's just say the trend is only developing here. At this particular case, I can still also enter on this touching candle or the very next bar. So in terms of timing, you want to enter as close to the 13 EMA as possible. You want to enter as close to the 13 EMA as possible. Now, when I say as close to the 13 EMA as possible, this is where all the engineers bring out their rulers and they start asking me for millimeters. How many millimeters is close enough and how many millimeters is too far? And I can't answer that because price varies. One bar is smaller than the other bar, and momentum varies. The momentum can also drive the price further away from the 13 EMA. So that is not a good measuring stick. The distance of the actual bar from the 13 is not always the best measure. So what I like to help people to see is that, as you can see here, this candle is only, let's say 4 millimeters away. And if we look at this candle is probably a good 15 millimeters away. Yet they're both the second bar. Okay? They're both the second bar from the touching. So what I want you to understand that the distance of the bar from the 13 is not always a good way of measuring the entry point as close to the 13 as possible. The best way I can to summarize what is close to the 13 as possible is to say enter on the touching bar or the one that comes immediately after. And you want to try to catch the middle of that bar. You don't want to wait till the bar closes, and you don't want to get in at the top. So you want to make sure you try to at least catch the middle of that bar. Okay? So don't sit there and hum and har too much, especially because there's a lot of momentum and the price just pulls away. I like to use the analogy, the ball is leaving the bat. Have you ever played with that ball on a string with a little bat as a kid? And as the ball moves away from the bat, the string extends to it reaches its maximum stretch. And at that point, when it's reached its peak, the ball then descends back to the bat because the string is pulling it. So if you imagine the price action, here's the ball. The ball leaves the bat. If you imagine the 13 being the bat, and when it gets to its maximum, when it hits the fractal or a pivot, then the string pulls it back and it retraces back to the 13, back to the bat. So you want to get in on your clear trades as the ball is leaving the bat. It's very, very important. So that is what I use to help people understand getting as close to the 13 as possible. How could you possibly know where the middle of the bar is until it closes? That's a good question, and I will explain that when we do some real time, okay? Because remember, let's just say as the second candle is developing, if you enter right away, you will be in the middle of the bar. Because if you use your fancy bar timer at the top here, can you see this pink indicator at the very top of my chart on the right corner? Now watch as it's kind of like a salt timer. You know those egg timers, right? If you watch this, this is a good way to measure whether you're at the middle part of the candle or the later part of the candle. By the time it gets to the latter half of this salt timer, you are now reaching the end of the bar. So if you're in the last quarter, then it's not a good time to enter. Rather wait for the next bar or the next move. So that's one way of measuring where you are in the bar. And then I just tend to use my eye. As soon as the candle develops, I'm in the bar, and then you'll see as it develops, you'll notice that you're in at the middle of the bar. But the salt timer is a very, very good thing. This fancy bar timer at the very top. I've noticed that the HFTs start some clear trades. Sometimes it starts a nice clear trade, and sometimes it burns me. Can you comment? Yes, that's a good question. We will I'll definitely answer that as we get going here. So let's just quickly cover the rules, and everything will come together very nicely for you. Is the fancy timer on the Mel Basic? Yes. Your fancy bar timer should be on all the templates that we provide you. Okay, so everybody understands where you should enter for your clear trade. Is there anybody who doesn't understand the entry point? Speak now or forever hold your peace. Do you try for level 1? You guys are jumping 3 steps ahead. You need to wait. I promise you, I'll take you to the promised land. I will answer all your questions. Those are good questions, but we're going to get going in just a second here. All right. Now, the nice thing about this bar confusion of where you can enter or you not enter is if you are a subscriber of Segredo Quant, it makes this gray area very much more simple. Because now, instead of trying to figure out, are you in the middle of the bar, is it too far, how many millimeters, and so on, now you can simply follow your number 1 or your number 2 for your entry points. You're looking for your number 1s or your number 2s. Now, you don't want to just jump into every number 1, number 2, like as you can see here. I'm not going to be getting in on this number 1 in the middle of a downtrend. It has to be matching color-wise the number and the bars. So as you can see here, the bottom bars are red numbers with red bars going short, and these are green at the top. So that's not in sync, right? It has to be red on red or green on green. So I would be looking for this here where it's red numbers with red bars, red numbers with red bars. That's when I know things are in sync. There's strong agreement, and that's my entry point if you're using Segredo. You can do the same thing for all time frames. So on the trend, you will see that it will be red bars at the bottom matching red candles for short, and on the trend up, it will be green bars matching green candles. Now, when it's a counter trend, so it's the developing trend, you will notice that the oscillator will be yellow bars for the uptrend matching green bars on top, and for the downtrend it will be blue bars matching red bars on top. So this is also in sync. If you see a green number with a yellow bar, because the yellow represents long, the green color represents long. If you see the yellow matching the green on top, then it's in sync also. If you see the blue matching the red for short, it's also in sync because blue represents short and the color of the red numbers represent short also. So that is what you're looking for in terms of entry for the Segredo, and that makes it a lot simpler than trying to read bars. So I highly recommend getting into that and getting used to that, and we will get more into that in just a second. Okay, one more rule here we have to cover. The matchy-matchy rule. Now, I get a lot of questions about matchy-matchy, so we're going to get into that in just a second. So let's just quickly read through them. Remember here we had enter on the touching candle or the very next bar. And another thing you can look for is the degrees of your 13 EMA. It must be 15 degrees or more. Can you see here on the top right, there's a little box called the Slope Box Multi. And this is in your indicators. It's on the Mel Basic template. And you see it's right below the fancy bar timer. And notice it's at 10 degrees right now. 10 degrees says it's not strong enough to get in for a clear trade. And some traders who want to filter bad trades will go, instead of you going in at 15, they might wait till 25 or 45. So you can use the different degree factor as an extra filter to avoid getting in on a flat market. So it has to be 15 or higher. Same for short. It must say minus 15 or higher in number. Okay? So 10 degrees, 14 degrees and lower is not going to work. So the trajectory, the degrees of the 13 EMA, and this number here is showing you the actual current candle. So it's showing you the degree factor for the right edge candle. Okay, if I click the next candle, you will see now it's at 8 degrees. The next candle now is at 46 degrees. So it's always for the entry candle, the current candle that you're entering on. Okay? So that's something to look for. Oops. And of course, 3 moving averages or more back in the direction. And then, of course, we're going to talk about matchy-matchy in just a second. So those are the basic core rules. There's some other things you can add, but we'll get into that in just a second. Now, before I move on to the next thing, before we start trading here, there's one more thing that I'm going to show you for all clear traders. We do have a template that I created for you using some of the arrow indicators that Barbara Cohen has designed for you, specific for clear trading. And if you go into your templates and select load and hit the drop down, you will find the template that's called the Mel's Clear Trade Chart. You select that. Now, it was created some time ago, and we've since evolved and added more indicators to the recent upgrades. So you won't find the HMA color change on there and the SMA regions and all these other things. You can add your own extra indicators. So I've loaded this Mel's Clear Trade Chart, and I'm going to show you a couple of the arrows that you're going to use really quickly. Now you can, as I said, notice there's no HMA color change. So you can go in here on the top, if you right click on your chart, go to indicators, and just quickly add your HMA color change over here under H. Make sure you use the color change, not the HMA, right? Now you can change the plotting style if you click the plus signs below plots, and you can change it from dot. I like line. I prefer line. You can change the width. Some of us wear glasses, so we need it to be a little fatter. There you go. And oops. Let's do one more here. I don't worry about the yellow part because that very rarely shows up. It's just the red and the green part that I really care about. And I'm going to do one more thing now. Notice on my chart I have the linear regression, the brown dash line that's following the price. That, as I said last week, I mainly use for the counter trending, for the scalping. That's your fast moving short-term trend line. So I don't need that for trending. We don't want too many lines. Less is always more. So we want a focused chart. We only want to use the indicators that are going to make our trend trades stand out. And so I'm going to remove that linear regression. It's the LinReg 4. I'm going to remove it. And I'm going to leave the orange one, the LinReg 9, the slower one, because I want to see the trend. I don't want to see the chop. Okay? So I'm going to leave that on with my HMA, and you're going to see the chart's going to look a lot better. Okay, so now you can see we're just following our HMA color change along with our orange linear regression, the LinReg 9. Now let's quickly take a look at the arrows. There's 2 arrows. One's an old one and one's a newer one. So the indicators that I'm using is called the STTF Clear Trade. TF stands for time frame. If you notice here, it gives me the ability to add multiple time frames to give me my matchy-matchy. So when I want to only get an arrow when 3 time frames are in sync or 4 time frames are in sync, I then change the time frame enabled quantity to 3. If I want 4 time frames, 4. Now remember, the more time frames you add in the equation, the fewer arrows you're going to get. So for the demonstration, I'm going to show you just 1 time frame. And that's the unique thing about the TF Clear Trade Indicator. You can actually choose how many time frames you want in the equation. The other thing you can play with these arrows is you can play with the degrees factor. Now, if you want fewer arrows, but you want the ones that show up are the good ones, and remember, it's not going to give you every good clear trade. The higher the degrees are, you can go with a degrees factor of 45 to show you the slope. The lower you make it, if you make it at 35, you're going to get a few more arrows. It's still not going to give you every clear trade that shows up. If you go even lower, it's going to give you a few more arrows, and it may give you some fake outs. So I'm going to put it at the lower one just to kind of show you some of the good ones and some of the fake outs. Remember, you don't want to trade blindly following arrows because it's not 100%. That's the thing about arrows. Okay? So I like to teach people the structure of the strategy without the arrows and then add them after as a friendly reminder. Now, the ST clear trade one is the first arrow we came up with that Barbara designed for the clear trade. And in this one, instead of the time frames, you can play with the indicators involved. Like you can decide whether you want the EMA as a filter. Do you want the fractal switch in use? Do you want the Linreg? And I've already set it to my favorite indicators. I've only got four ones that I'm using in these equations. The 3 moving averages, the slope for the SMA, the Linreg, and the EMA slope. Now, I like to play with the EMA slope. Again, you can make it 45. You can change it to 35, 25. Whatever degree you want on that 13 is going to give you more arrows, and some of them are the lower the number, the more fake out you're going to have. So we're going to look at those two factors. So you can also play with these for different markets. If the market is very volatile, like crude oil, gold, and you want to be trading in those, you might want to have a higher degrees. You know, for markets that are slower moving, like 6C or 6A, even the euro, you might want to lessen the degrees factor. So you can play with that for different markets. It's not one shoe fits all. So please pay attention to that. There's nothing changing on the charts. The Linreg 4 is still there. Can you guys see my, probably because I'm running so much, can you guys see my chart right now? Can you see this indicator box? Fine. It's just a couple of you. It might be your internet. So so I haven't been talking to myself this whole time, right? You guys have been able to see. So I only got one no. One no. 2 no's. Lunar 4 is gone. Gail can see it. Okay. Marina says Lunar 4 is showing. Okay. All right. I think it's just a lag. It's all based on, sorry guys, it's all based on where you are. You know, some of you are very far from me, so it's the lag in the internet. You just have to hang in there with me. I'll try to slow things down. It's on their end. Okay, great. Okay, so I apologize. You guys are just gonna have to hang in with me. So let's continue here. So as you can see, I'm just going to show you a couple of arrows really quickly. I don't want to spend too much time because these are just bells and whistles that you can add. So you can see here we have, you know, I would prefer to focus on something like the Segredo anyways, because some of these arrows are going to come in late, and then, you know, because the timing of Segredo, you don't have to deal with lag and all of that stuff. It's all going to be there. You can see there's multiple arrows showing you the trend, but they're nice to have. It just helps you to see what is really the trend part of the price action. You know, let's see. Here's another arrow here. Couple arrows, and again, it's not going to. Here's a trend developing, and there's no arrow. but an arrow came in over here at 5:55, and an arrow came in here at 6:15. So they're just nice to have. Let's see if there's any more here. Now, this is where we get into the fake out city, when we start to get into that real choppy zone. Can you see here we have an arrow and the price fizzled? Because it was a developing trend. As you can see, it just crossed the move, but the moving averages were really flat. Okay, you can see your MACD just was already on the top. So even though we had 3 or more moving averages in the equation, the trend wasn't a full-blown trend. You can see with the moving averages clustering together, so the price action just fizzled. And this, incidentally, is actually not a true trend. So you got to watch for this. This is not a true trend. Who can tell me why? Who can tell me why these two price actions, even though they look like a trend, because the price cleared the other moving averages, but who can tell me why these are not a true trend? Run to the R4. Now there's 3 moving averages here. Look, the price crossed the 13 cross. As soon as it crosses these moving averages, we have 3 moving averages back in the direction. There's 3 moving averages here too. But there's something specific. EMAs are fisted, no 3 moving averages. MAs reversed. Nope, nobody got the answer right. I'll give you a clue. Look at the time. And I'm stressing this because this is a very important point that you guys mustn't overlook. Good, Linda gets a double chocolate chip cookie with a cherry on top. You must, guys, every day go to, especially for trending, go to forexfactory.com and check out your news. So the reason why the price just fizzled where it did, the setup, the criteria was there to give you an arrow, but it wasn't a true trend. The price developed so quickly. Look at the size of those bars. Look at the momentum. Developed so quickly that it plotted a trend, but it wasn't actually. You can see the 100 and the 200 are flat and squished together. The 50 is flat, and those are really your real measuring stick for a developing trend, because those are lagging indicators. So they didn't have time to catch up, because the price, it was only the 13 and 20 involved in that price action. Jeff says you got me. So you're going to watch for that. Now, it's not to say that you can't trade them as a clear trade, because you could technically get in on the second candle here and go ahead, and we're going to do a couple of these. You could do it as a trend trade, but what you're trading is the momentum of the news. So we call that a fundamental strategy. It's not a technical strategy. So that's the reason for this fizzle. Okay, it's not a true trend, and so you must check every day your Forex Factory, and you can see there's the news. 8:30. We had 8:30. There it is. Okay, we had and the euro is going to lag a little bit, but it is going to respond. Came in at 8:35. We had trade balance, unemployment claims, and then we had flash manufacturing PMI at 9 o'clock, and there you go, 9 o'clock, bang. There's your massive move. Okay, so something to look for when understanding your trend. Ask yourself always, is it a fundamental move, meaning a reaction to something outside of technical indicators, like a news item or somebody speaking, or is it a technical move? Okay, very, very important. Now, over here you can see we've got a whole bunch of arrows because I lessened the degrees. If I increase the degrees, I get rid of some of these arrows. And you can see basically if I went on these arrows, I would get faked out. So we're going to talk a little bit about that as well. Okay, so let's get going with the replay here. I'm not going to waste any more time. And I'm going to show you what matchy is next. So the first thing we're going to do is I'm going to disconnect from the market, and we're going to start some real-time trades here for you. And then I'll answer those questions about where to get in, first level, second level, and if I haven't answered your question, just feel free to retype the question that you typed earlier. So feel free to play with those arrows. Like I said, you can set the degrees for different markets, and I would encourage you to balance them with the Segredo timings of the number 1 and 2. And we're gonna talk more about that in just a second. So let me just bring my little box over here. There is instructions, if you haven't used the replay yet, in your members download area. There is instructions on how to download the replay. And also how to clean previous downloads, because you'll notice if you don't clear the history of your downloads, when you first connect, it'll go all the way back to your earliest download, and you don't want to keep adding and adding because it's eating up your storage space on your computer. So at some point you want to clear that history, and those instructions are in your members download section. So I'm going to, you right click on the chart. Oops. Before you do that, you want to actually make sure that you're on the right date that you actually downloaded. So I'm going to just quickly move forward to the 24th. And now we're in the right, where you'll see the charts loading just a second here. Now I can actually right-click on the little box and go to a specific time. Remember, when you're practicing, you don't want to waste time in trading markets in time zones that you don't trade. Only trade the same time zones that you trade every day, because the same traders show up at those times. So you get used to the market momentum in that time zone, okay? And don't get bored sitting wasting trading in dead markets trying to predict. Only go to specific things. You're just trying to get it down to a science. So you want to have a more focused practice when you practice, guys. So I'm going to take it to 1 foot. Oops, sorry. I'm going to start early in the morning because I want to show you a specific setup, and we're going to talk about the rule. Oh no, hold on 1 second. Huh. Just bear with me 1 second. Quickly try to fix the chart here. Yeah, I know. That's why my date's not it didn't load properly, so I'm just reloading it. So it just takes a minute. There you go. Now we're in the right place. Okay. Okay. So I'm going to push play because I want to show you. Everybody asks me, what is matchy-matchy? So let's address the final rule really quickly so you understand this, and then we can talk about this for the as we can continue talking about this as we keep trading. So the final rule is, as I've stated here, 2 or more time frames are in sync. And I coined that matchy-matchy because what I found is, and you have to understand this principle when trading, it's very different for scalpers. When you're scalping, you only really need a 1-minute chart You can follow any type of rule on a 1-minute chart pretty effectively when trading. You can use something like a 3-minute chart or a 30-second chart or a tick chart. These are what I call the short-term time frames. They show you up close every whipsaw, every angle, and you can get in and scalp your few ticks that you need in any given direction pretty successfully. However, when you're trying to see the trend, okay, and you're looking at a 1-minute chart, you have to understand that the time frame is too short. So you might get 40 degrees and it turns around on you and you scratch your head and you go, but it was 40 degrees. What happened? It's very hard when you're going along to say, okay, now the market is downtrending. Oh no, now it's going up. Oh no, was it downtrend? Oh, okay, we're downtrending. Oh no, now we're going up. Can you see? It's very hard to establish the trend on a 1-minute chart. So we went down and now we're going back up again. How do you see the trend on a 1-minute chart? It's literally impossible. So for this is the reason I try to expand people's view away from the 1-minute chart and look at the bigger picture. So then I like to use other time frames to do this. You can use a 3-minute chart, a 5-minute chart, and you can actually do this with range charts. You can use a 4 range with a 12 range and so on. You can use different types of tick charts. You can, whatever workspace you are comfortable with, you can play with it. So the 3 and the 5 I call medium term time frames. They show you the medium picture of the same price action. And then what I call long-term charts are 50 minutes and higher. Sometimes you can do a 60-minute. You see, if I compare a 60-minute, now you can see the trend. You can see where your moving averages are, and you can see 60, price action from an hourly view. So the higher you go in time frame, I like to double this. You can go up to 120 if you like, or 240. A lot of traders use 240. So you can see from yesterday, especially if you're a swing trader, from yesterday you can see that the price action was following its moving averages all the way up. So we can say that the trend of the euro market over the last 2 days has been bullish. So it's very different to gauge the trend from a higher time frame, a longer term time frame, and compare it with a 1-minute chart. So I'm going to show you how to trade real time execution, playing with these time frames to see when it's in sync, to demonstrate strong agreement. Lots of traders involved in that direction. That's the idea here. We're not trying to forecast, okay? Because trying to forecast over a 120-minute or 240, you can't really forecast and know whether you should buy now or sell now. It's hard to do that because it takes too long for things to develop. You can say, I think it's bullish or bearish, so if I'm going to go for a 40-tick move, put on a trade and go to Home Depot and come back, then maybe I can go with it. But it's still a gamble, and you may have a lot of risk, and you have to have a very wide stop if you're going to do that. Okay, so to minimize that risk and try to get the timing down to a science, I will show you how to link up from a 15-minute and lower, and we can do this with the Segredo as well, to get you that exact timing and to see where the strong agreement is. Does everybody understand that? Explain a swing trader. A swing trader is a guy who pays full price, not the $500 margin rate, full price to hold his contracts through the night. That's a swing trader. Okay, so you have to set that up with the broker. You can't just decide, oh, you're going to leave your contract on past closing bell at 4:15 or 5 o'clock, depending which market. So if you pay full price for your contracts, you set it up with a broker, you can actually hold your contracts if you're in a short position and you want to ride it through the night till the next day because you've looked at the daily chart or you've looked at the the higher minute charts and you've gauged the overall direction to be bullish or bearish. You can actually do that. So from a daily view, you can see that the euro market has been bullish, and you can hold your contracts overnight. That's a swing trader. Okay, so let's get going here. Let's see what matchy matchy looks like. So I'm going to actually push play because I want you to see how when things come in sync. So right now we can see from a 15-minute, we've got a doji. I'm going to show you a 5-minute. Things are a little flattening out. Our 3-minute pretty much in a fist here with these three moving averages. Price action looks pretty choppy. And our 1-minute doesn't look that exciting either. The moving averages are coming into a cluster. So let's push play, and I'm going to speed it up because I want you to watch this, and then we're going to trade it. And I want you to spot, I want you to see if you can spot, oops, I want you to see if you can spot, sorry, matchy matchy, let me do this. Tell me when you see things are in sync. Somebody says now. Just going to speed up a little bit more so that, because I just want you to get the visual first, and then we'll come back and trade this move. And this, and for a lot of you who don't see the correlation, so can you see that all charts are moving together real time? Now, granted, this is speeded up, right? But can you see that they're all moving the same direction? The moving averages all look the same across all time frames. Can you see that this looks like a nice pretty fan? This looks like a nice pretty fan developing. My linear regressions are the same. My HMAs are the same. The color of the candles are all green. So this is what I call matchy matchy. How about the two pivot lines? Are they in the way? Isn't that hard to predict that will go through? I'm not going to talk about support and resistance just yet. Okay, don't worry about the pivots. I only want you to look at trend lines, short-term trend lines, and long-term trend lines, which are your short-term are your linear regression and your HMA. Your long-term trend lines are your moving averages. So I want you to see the trend from just trend lines and price action across 4 time frames. And you can see that if you were, I don't know if you guys played I come from a different country, so when I was a kid we played a game called Snap, where if you both had the frog card and you put it down, the first person who slapped the table and grabbed the cards and said snap, because they were the same, got the cards. So this to me is the frog cards. You know, this chart looks the same as this chart, looks the same as this chart, looks the same as this chart, and that's what I call matchy matchy across the board. They're in sync. And when you see this, what this represents is that everybody and their brother and uncle and sister and auntie are all trading long right now. That's what that represents. Can everybody understand that? How often during the day do you see the price match up so well? I can't really say that because it's basically gonna happen on most of the trend moves. Okay, most of the trend moves. Now, I'm going to go one step further, and I'm going to say this particular matchy matchy is what I call the universal alignment. It's the universal alignment, meaning all the stars have aligned. And the stars I'm referring to are the moving averages, candles, short-term trend lines on all time frames. So these moving averages look the same as these ones, look the same as these ones. So basically the core charting on all time frames look the same. That's what I call the universal alignment. Now, there are some times where just two time frames look the same for all the core charting, and it may only just be green candles and not the moving averages on the higher time frames. That is also a matchy-matchy. It's just not a universal alignment. It's not all the stars aligned. It's some of the stars have aligned for the lower time frame, and some of the stars have aligned for the higher time frames. Okay? So if you have everything on the lower time frame, but you only have the green candle, that is okay too. Because remember, the 15-minute chart candle is 15 minutes of going long. That's a lot of price action. You can still get a good 10 ticks out of that. That's still a viable trend move. So I want you to understand this. So we're gonna do some trades that are a matchy, but not a universal alignment, just some of the stars. And we're going to do some trades that are like this. And when you see this formation, then you can mortgage your kids and bet in the market, because this is your biggest move of the day. This is the most price action you're going to get in a given direction. Now, when you do see this, for the person who asked about the pivots, guess what? You don't care about pivots in the way, okay? Especially going up to the R4. If you're going down to the S4, you might worry about the S4. There's more agreement to go long than there is to go short, okay? So when you see this kind of alignment, you don't care about pivots in a way. You're trading the momentum. Look at all the yellow. The yellow in the candles is your momentum, and it's right across the board. So you're going with that momentum. Like I said, everybody, their brother, their uncle, their auntie, their Susie, and everybody is trading right now. Who cares about a pivot? It's not going to stop the trend. Okay? So very, very important that you understand this formation represents your strongest agreement in the market, and that is the ultimate matchy-matchy, when everything looks the same. Now you can do the same thing with Segredo. If you look here, you can do the same thing with Segredo. Here's my 3-minute chart and my 50-minute chart. I try to get the 1-minute chart, but it wouldn't go back to 1 o'clock in the morning, and it goes back to 2 o'clock. So I'll just use the 3-minute chart. Actually, let me do the 5-minute, just so you can see 3 time frames. Just bear with me 1 second here. Okay, so I'll do it like this. Here's my 15-minute Segredo, here's my 3-minute Segredo, and here's my 5-minute Segredo. And if you look at the time, 1:45, let's get this box out the way. 1:45 is when the move started. Okay. Here's 1:45 where the move started. 1:30 to 1:45. Can you see that all 3 time frames look the same? They're all green on green, big bars. The numbers match, the lines match, all 3 time frames match. So you don't need your Ninja Trader to see matchy-matchy. So if you guys really want to maximize visualizing the trend out of your Segredo, and if you want to pick the best opportunities and pick the best number 1s to get in on and number 2s, I would get in on where you see multiple time frames are in sync. They look the same. Is that clear? Is there anybody who doesn't understand this concept? If all are going up long, do we consider that it will continue a certain percent and say with a Fibonacci, or just guess how many ticks, or how do we judge this? That's a good question. I don't particularly like Fibonacci numbers. I think Fibonacci is an outdated generic indicator, because the markets have too much HFTs today. So if there's this much momentum, it's going to plow through the Fibonacci just like it plows through the pivots. But I would prefer that you use things like fractals or your HMA color change. And you'll see for your exit points if you want to maximize the price action. And we're going to do that again. So I'm going to show you that. How often does this happen? I can't say, because every day is a different day. Sometimes the market's flat for a whole day, you know. That's why I don't rely strictly on one market. If I see the euro's flat, I might go trade natural gas. Sometimes some markets perform differently on different days, so I can't really say. And sometimes it's a one directional day. Sometimes it'll go up in the morning, down in the afternoon. So you just gotta look for this formation, and we're gonna get into this again. Which time frames on the quant use for live trading? You can use the 1, 3, and 15. You can use the 5 and 15, or the 1, 5, and 15. So, but this is the formation you're looking for to see this is what I call the universal alignment, the ultimate matchy-matchy. Now, there's various, as I've stated already, there are various forms of matchy-matchy where it might not be the 15-minute chart, but it'll be just the 1 and the 3. So we'll come to that in just a second. So let's go and do this trade, and let's see how many ticks you can take, okay? And when you should get out of the universal alignment. Because remember, this is your biggest move of the day. If you come across one of these, and they happen throughout the week, sometimes multiple times in a day, won't just happen once. Sometimes, you may not get a very good one, but they happen enough for you to make some serious money on these if you look for them. So let's do this move again, but let's see how we would actually trade it real time. Okay, so I'm going to take it a little closer. Let's actually I'm going to take this entry here. Because it's already aligned, just so we can see here. Do one. Sorry, let me just check something. Okay, I'm going to take it back to 145, just so you can see as it's developing. Now, one thing to notice, which fractals do you leave on the chart for trending and which do you remove? For trending, you would leave on the turquoise and brown and take off the red and the green. Because remember, the red and the green are for counter trending. You're bouncing off them to close the gap. So you would leave off, and I can demonstrate that for you. Well, actually, I want to leave them. I need to leave the green on just so you can see where the trends. It depends. It depends if you don't like all four on your chart and you want to focus on the direction and the entry, then you would use the brown and the turk. If you want to pay attention to exits for your trend, then you're going to need the red and the green as well, because the red and the green are going to tell you when the trend is about to fizzle. Okay, the turk and the brown are going to show you entry. The red and the green are going to show you the exit points. So depends. If you have to choose only two, you have to decide whether you need them for exits more or whether you need them for entry. I'm going to tell you, you probably are not going to really need the brown and the turk for entry, because you're going to be using your moving averages anyway. So it's probably just best to keep the red and the green so you can see the exit points. Oh, Jack says today the gold was matchy-matchy through 30-minute chart and blew through R4 by 70 ticks. Yeah, I'm telling you guys, if you look for this formation, you're going to make some serious money. If you made this your focus, Made this your focus, you guys will be, you could, stop dilly-dallying with the chop, you know what I mean? Only focus on the real trends. And that's the idea here. All right, so I'm going to push play for a second. Okay, so now we can see it's pretty much flat across the board, and nothing exciting just yet. So now if I look at my Segredo chart, my 3-minute chart, you will notice, I'm just going to scrunch this a little bit so you can see it better here. You will notice that by 1:45, I've already got my number 1. Okay, and it kind of looks fuzzy on the 1-minute chart. So let's just pause it here. Can you see we're at candle number 147 already on the 1-minute chart, and you can't really see things clearly. It looks like we're in a fist. Is the price really going to go? You can't really see that the price is developing a trend on the 1-minute chart because your magnifying glass is too close. You're seeing too many things in the equation. It's like you have to take 10 steps back to see where's the direction. And this is where the Segredo really helps you out. Now, if I compare that with my 15-minute chart, here's the beautiful thing about trend trading using your 15-minute chart. I'm going to encourage you to use your 15-minute chart, especially on the Segredo, because if you're looking for the universal alignments, okay, here's another secret. Your 50-minute chart on the trend parts are going to help you to see that, because your 50-minute, look where it gave you number 1 at 1:30. And your number 2 here is at 1:45. Now, I don't always like to jump in on the number 1 every time on a 15-minute chart because number 1s can change. As you can see here, we have a 1 that's kind of green, and then it goes to Christmas. Then we have another number 1, and then finally we have a red 1-1, red on red number 1. So only the third number 1 kind of played out, and then you can see kind of flattened down because this was actually the counter trend. Notice we're on the blue bars. So I don't always jump in unless I'm scalping. If I'm scalping on the lower time frames and not trading a trend of the 50-minute chart, I don't jump into the number 1s on the 50-minute chart. But by number 2, if I see matchy, if I see it's green on green or red on red, I'm going to go for it. And notice that by number 2, on the Segredo 50-minute chart, we are at 1:45, and we're still fuzzy on the 1-minute chart. So I'm going to tell you that if you're trend trading, you don't even need the 1-minute chart. Okay, having the 1-minute chart can sometimes actually confuse you to seeing the trend. Now, if we look at the 3-minute chart, filters a certain amount of noise. And now I can see, well, that's looking a little better. The 13's crossing. We're 16 degrees. This candle's starting to go higher. We've got the circle with the dot here bouncing off the red fractal. So we know we're going long because we're going from support fractal to resistance fractal. And if I look at my 15-minute chart, can you see this has got a green candle with momentum? And look where all my moving averages are below. So I know that my direction is true. And I'm at a number 2 already. And if I look at my 3-minute chart at 1:45, my 3-minute is green on green, number 2. So I've got these 2 time frames that are in sync. And so I can happily just trade 3-minute and a 15-minute. Don't have to have the 5 and the 1. I can just use these 2 charts to catch the best trends using my Segredo. So I can pull up my, and it's not to say I'm not going to experience some risk. So let's do this. We're going to put our order We're going to put 2 contracts on. Okay, so I'm going to show you how to do scaling out to grab most of the trend. And I'm going to push play. And because we've gotten the number 2 already, we're going to enter the trade and see how much risk we get. So now, for trend trading, let me just answer that question about level 1 versus level 2. Can you see that at this particular point, if you look at the fancy bar timer, we're at the halfway point. We're just going past the halfway point. So I know I'm in the middle of this bar already, if you look at the fancy bar timer. So I don't want to be messing necessarily with level 2 because momentum, and I don't want to be messing with level 1 either. This is level 1. As you can see here, I'm in the front of the queue with everybody else. Level 1, level 2, level 3, level 4, level 5. 6 is just the accumulation. So you don't want to be at level 2. This is level 2 because the price may not come down and pick you up. It may shoot off. That's the difference between trending and counter trending. Counter trending, the price dilly-dallies, so it goes in both directions, so it can come back and pick you up. Trending, when momentum kicks in, as you can see, it explodes, and you don't even get a chance to get in. You get left behind. When the ball leaves the bat, it's like the 200-meter sprint. You get left in the dust. So you can't afford to do level 2. You'll miss the party. And level 1 is not a guarantee either. So you know what I do? I do the bid and the ask positions. I buy on the ask for going long. I use the quick buttons, and I sell on the bid for going short. And if you don't have those quick buttons, you simply go down here to properties, right click on your dome, go to properties, and you change the setting where it says show quick buttons to true. So a lot of the times I don't have time to get. Now sometimes when the market's slow, it's not sort of a lot of momentum, you can still get in at level 1 and even get in at level 2. But just for this example, I'm going to use the quick buttons so you can see how we get in. Is that clear? Would you use a market order? No. Never use a market order, ever. What's the difference between quick buttons and a market order? A quick button says, if I hit the buy on the ask, it says, get me in at 37.93. That's where I want to get in. Not 37.92, not 37.94 or 95, but 37.93. If I use market order, it says, get me when you want to get me in. And that could be at 37.97. At the high of the bar, because the price is moving so quickly. And if you're down south in Australia and your market order signal has to fire across the oceans to get to the Chicago, you could even get in at 37.99. Okay, so that's the difference. Never use market order for entry or exit. Or stop order. Yeah, no, you don't want to do that. It's best, in those cases, it's best to do a level 1 or the quick button. All right? Everyone clear on that? So I'm going to use, I've sometimes, out of habit, I just put my cursor there, but you can just use the quick buttons. All right, so can you see we are now in at the middle of this bar, because there's the fancy bar timer. This bar still got to continue. It may go lower than this, but we're going to watch as this price continues. And let me just move this aggressor out the way for a second. And I'm going to bring the 1 minute into view. Now notice on my 1 minute chart, you know, I'm not in on any particular candle. It's right at the cross, but there's no touching candle or whatever. It's nothing specific. And that's kind of the gray area, right? So because we're trading the trend, you can afford to be a little flexible on the rules. For scalping, when you're trying to grab 3 ticks out of a 5-tick spread, you have to be really specific, okay? But for trending, you can because you're at the beginning of a trend, you can suffer a little heat. So it's not as strict as scalping is, okay? So you got to keep things in perspective here. So you may experience a little risk because you're trading off a 3-minute or a 5-minute or a 50-minute. Please understand that. And the higher time you go, remember, because you're trading a direction of a bar and there's a whole bunch of price action in the while the bar is developing. All the stows are at the high. That's a very, very quick question. Well, actually, they're not all at the high because the stow 20 still has to cross. The stow 50 has to come up. The 20 just crossed, but the 50 still got to cross. The 100 still got to come up to the 80 line. So that technically the 15-minute stow 20 and 50 is only just about to cross the 80 line. So they haven't really crossed the finish line yet. And here's what I'm going to tell you. When it comes to trend trading, okay, I don't use stows and MACDs. I don't use them as my mainstay. I might glance at them every now and again, but what I'm looking at, because my eye likes to go sideways rather than up and down, I'm looking at the formation, and I prefer to look at my Segredo. Because trending, you're going to see that the stows being at the top versus the bottom is not going to come into the equation for your biggest moves. Because look, now the stows just crossed on the 1-minute chart, right? They're just crossing on the 5-minute chart. Now watch. Watch what happens. Look, we only suffered 1 tick drawdown so far. Just 1 tick. That's the only heat we've suffered. Going to speed this up a little bit. There's our 1 tick. There, the brown is our entry position. The stows are really for counter trending. Yeah, we got momentum again. Notice that our 3-minute bar now is coming to the end of the second, and there goes momentum. Are the stows in the equation at this point? No. The move's only just getting started. Look at our 15-minute chart. Only just getting started. Now, what you can do if you want to avoid your risk, say, now you'll notice this HFT bars just came in. Can you see this huge HFT bar? And then you get this pullback. Even though you get, that's the nice thing about the currencies. Even if you get in at your right point, especially using your Segredo timing, where you're following your numbering system, okay, you can avoid some of this getting caught by this HFT. Because even though we've had this huge HFT and we had the pullback, because that's what HFTs do, let me just clarify that for you. The difference between trending and counter trending with HFTs is majority of the time you're going to trade with the direction of the HFTs, majority of the HFTs. Now there is times where you can get faked out, but if you're at the beginning of the trend, notice that the 13 just crossed. The HFTs are going to help to fill you as opposed to taking you out. Now, if you're not following the rules for entry, like getting in as close to 13 as possible, waiting too long, if you're that nervous, hesitant trader, then you really need Segredo, because you're gonna be the guy that's gonna wait to see the stars align. And when you see the stars align, guess what? You're late to the party. By the time you see the stars align, you're late to the party. You got to see it as the criteria for setup is there. And most of the time, some of you are going to get in at the high of the bar, and you're going to experience that risk. And if your stop is too close for trending, you're going to get taken out on the red bar that came down. So it's very important if you're trend trading to have a wider stop, okay? Because you're trading a longer term prediction and you're trading with the HFT activity. Advantage of Matthew, HFTs are virtually 100% in your favor. Exactly. You're so right, Jack. The HFTs are virtually 100% in your favor. Now, where the counter trending people get caught is because, see, here's the HFT bar. Now, what happens if you got in on the red candle prior to, thinking that the market was changing direction? That HFT bar will come in and take you out. So in counter trading, most of the time you get caught in these things here. Can you see this? You get caught and you go short here thinking you're in a counter trend, and an HFT comes in and takes you out. So but it's not to say you can't get HFT out of the market on a trend either, and I'll show you that in just a second. But anyway, so let's move this along because I got a few more trades to show you here. I'm going to run out of time as usual. Because I just want to show you the exit point because I want to move on to the next one. So again, look, we're still not in a whole lot of heat here. We're actually still in profit, even though we've got some red bars coming in. Now notice that my lower time frame is flashing red, but my higher time frame is still green. And if I look at my Segredo, we're still green on green. So I'm going to stick with this. Now, the nice thing about doing this is now you can use your pivots as an exit point. So here's my R4. I can exit one of my contracts at the R4 and say, there, I've taken some profit off the table. And I can now play with the fact that we're still green, and I can play with the numbering factors of my Segredo quants. If we look at the time right now, we see it's 1:59. My Segredo says 1:59. We are at number 5 using my 3-minute chart. My 3-minute chart is a very good measuring stick for exit. My 15-minute getting in on the trend is a good way to get in on the number 2 for entry. But now I'm looking for a very good exit point where I would maximize the direction and not lose profit by when it changes direction. And one of the things we want to do for exits is you want to get out on number 7 or Christmas. So as you can see, we're still on the number 5. I've taken my first contract off the table because I see a pivot there. I see that we're hitting a green fractal. Okay. Now, please understand that when it's a strong trend, you may hit a green fractal and then you go higher, just like Fibonacci's, and you hit another green fractal. And you may even hit a third green fractal. So just because you hit a green fractal doesn't mean it's going to necessarily change direction. It's just a speed bump. And this is only to do with trends. So you might just be looking at a retracement here of this green fractal and the R4. It doesn't mean that the trend's over. And this is where the Segredo really helps you, because now you have a numerical value as opposed to trajectory and rules. Now you have a number 5 and you go, well, maybe because we're still green and I'm 200 up and I'm way higher than my entry position, I'm not going to lose any money. I can afford to take the calculated risk to see how close we're going to get to number 7 before I exit, and if they're going to get through this R4. Do you see now you've got a lot more going in your favor, a lot more to work with as far as actual tools. So let's look at this. Let's push play here. Does the long wick in the Segredo mean anything? Yes, the long wick means we're heading for a gap close. Okay, the HFTs have come and gone. So we may have a gap close here. We may even have a little retracement. There's our red candle bouncing off the R4. So it was good that I took some profit off the table. Notice our little arrow, our clear trade arrow came in, but we were in early, much earlier based on the Segredo. See how laggy the old arrow is compared to the Segredo. The Segredo is going to get you in much earlier, so you really catch the meat and potatoes. So the pullback is happening. We've got a criteria setting up for gap trade, but there's no V of a Lundberg. There's no real gap close to be had. And notice that the stows are at the top the whole time. And we're still going higher. That's the thing about stows and trending, is that they can stay at the top for a while and you can get 70 ticks. they can stay at the bottom for a while and you can get 100 ticks going short. So you can't really use the stows or the MACD to tell you that the trend is over. They're not the most useful tools for that information. They're really used to show you change of directions. Did you say you used the number 2 on the Segredo for entry? I used the number 2 on the 15-minute Segredo for entry. Yes. Number 2, 145. That's green on green or red on red. You're going to see. Or even on the blue and the yellow. Okay, but that's my favorite entry point for the universal alignment. And you'll see that there's my 3-minute 145 is giving me a number 1. Now look, can you see that we're still not coming short yet? We're going a little higher. How about the 15-minute ninja? Well, the 15-minute, can you see there's my entry? I'm trading from the low of the bar to the high of the bar, and I already made 200 bucks. So we're trading the green color of the candle plus the direction of the moving averages. Let's bring this down a little bit here. And I'm just going to speed up because like I said, I want to try to squeeze as many trades as I can in the next 30 minutes. And there we go, even higher. Can you see there's the second green fractal now? We're still going higher. Now notice on the dome, I want you guys to see something. Notice on the dome we have this green bar across the top there. That's your low and high, your high of the day and low of the day markers. If you go to properties and you want to put those markers in, I think it's very useful because they also are a good exit point. Show where it says show daily high and low markers, set it to true, and you can change the colors if you like. You know, you can see here daily high price color, mine's pale green, daily low price color, mine is light blue. You can put whatever color you want. But when I see that, they've chased the high of the day. Sometimes I'll push it a little higher. That's also a very good place to exit if you want to maximize your amounts of ticks. But I'm going to leave it a little bit, and let's see how much higher they push it. Because sometimes they'll hit it and they'll push it a little higher, and then they'll start to come back down. So there's the momentum. Pushing it up to 17 now. The high of the day is now 17. And on this bar, we're at 203. At 203, we're at number 7. So technically, my 3-minute is now giving me a number 7. So this would be the place I would exit. I'm now out. Can you see I caught the high of what I caught? There's the wick coming in. Okay, I'm on the fractal, but why am I exiting at this particular point? Because I want to catch the meat and potatoes and some gravy. I'm not too greedy. I don't need the very last tick. I don't need the very last tick. Okay, I am comfortable with the fact that we've pushed it to 18, and I'm comfortable with the fact that my number 3, if you look at my 3-minute chart, although you can't see the number there for some reason, is now on number 7. There's 6 at 200. There's number 7. And even if you get a little extra green, it doesn't matter. It doesn't matter because you look, we went to number 8, went a little higher, and then we started to drop. You don't need the very last tick, guys. Just take, as it's hitting the fractal there, you see that you're at number 7. Take the money off the table before it changes on you. That's the best way. And when you see this combination of information, where you see that your number 3 is at number 7, that's your exit point, and you see that you hit the high of the day according to your ninja information, you see that you're on the fractal already, it's time to exit. Because now you see we're dropping, we're starting to lose profit. Now we're going down to 15, and you're going to see the circle with the dots going to come in just a minute, and the candle's going to turn red, and there's our Christmas to show us that coming in. So as soon as you see Christmas, you can hang in there if you want to see the actual red, or you can exit as you, I like to exit as you land on that fractal. When you see that last bit of momentum and I see this, and I want to exit on the fractal. That's what I use my green fractals for. So that's why I say keep the red and the green fractals on your chart and use them actually for your exiting point. But you don't want to exit on the first time you hit the first green fractal, because you're going to get multiple fractals on the trends. And the numbering system is going to help you to distinguish whether you're on the first green fractal or third green fractal. See, now we're dropped to 13 already. So we're starting to lose our profit. So by exiting on that fractal, so don't always wait to see red if you want to maximize your profit. And that's plenty price action. Look, I made $400 on 2 contracts, basically, right? 50% return on investment on 1 trade. And how long was I in the market? Let's measure the time. That's what a universal alignment does for you. 147 and I'm out by 203. Like, what's that, 16 minutes? And you just made double your daily target, 1 trade. So do you need to be hacking in the jungle trying to scalp 2 ticks at a time? If you just wait for the right alignments and take hold of your opportunities. And you don't have to do 2 contracts like I did. You can just do 1 contract and just get out of the R4. That's a safe position following the rules. Getting out at a pivot is a very safe position like that. So after the move, would you turn around and go short for another move, knowing it's going down? That's a very good question, Gail. I like that question. She says, after the move, would you turn around and go short? Well, here's the thing about trend trading. Here's the thing about trend trading. Rudy says you need to start these coaching classes soon. Is that trend trading, you don't want to be in a hurry to just jump in on the counter trend, because you don't know if the momentum is over yet. Can you see? Look, they're taking another run to 38.18 right now. More momentum. You don't know when the momentum's over, and this is where you guys get caught. I only like to, especially in the trendy markets, I only like to counter trend when we actually get to the reversal part. And if you are going to go short, you better wait for your number 1s and number 2s to show up on your 15-minute chart or your medium Segredo. I wouldn't go short on Christmas in a trendy market. No. I would wait for the red number 1, number 2 before I go short, because you just don't know when the. So if I was going to go short here, look, I'll be trading on Christmas. I want to wait for, look, is this really a viable counter trend? This is a retracement. The trend is not over. Now watch. We're going to do another trade here. I'm cheating because I'm giving you the future on this. You just don't know when the momentum. So I don't advise you to jump in. I advise you to stick with either trending, going with the trend, because your brain is wired to look for the trending information, and stay trending all day, and only when you see the trend is really over, take a few counter trends. But don't try to go trend, counter trend, trend, counter. It's like going from first gear to reverse gear, first gear to, your brain gets all mixed up. You end up being late, you misread the timing of it, you get caught, you get HFT'd. It's a disaster. Stick with one thing, and that's the idea of just choose trend trading for a day, or just choose counter trend trading for a day, you know, or more, you know, more of one and a little of the other. And this is where a lot of you get into trouble, because you're not focused. You're not focused on just looking for a specific thing. You're trading the markets. You're just hacking everything, trying to grab everything, and you end up with nothing. So I'm going to speed this up because I want to move on to the next one. So as you can see here, It's a retracement, right? So had you entered here, by the time you saw this red bar 14, it came down to 12. That was only 2 ticks. You know, maybe you're not even, now it's closing higher. It's closing at the 13's coming up to it. So if you had put your 3-tick profit, you know, you could potentially, this thing could turn around on you. You know, just now it's down to 12. So depending on the timing of your entry, maybe you'll make your 3 ticks, maybe you won't. It's not a guarantee. Not a guarantee. So be very, very, very careful with that. You can't always gauge the momentum. I would definitely follow the Segredo for that. If you're not sure. Is the trend more common in trendy markets like 60? Can it still apply to markets such as crude oil and gold? Crude oil and gold is definitely a trendy markets. Crude oil and gold have significant trends, but they also have significant counter trends. So it's not to say you can't trend trade in crude and gold. You can. The difficulty between getting in crude oil and gold is this. Notice that the timing of my entry for the criteria, here's the big difference, and you're going to find this when you do it on the replay. You go actually replay a trend trade in gold and crude oil, and then do it in the euro and NG, and you'll see the difference. Notice the timing of my entry for when I got in. You know, now after the fact, that looks really small, but when we were doing it real time, okay, this entry was pretty significant. This candle was higher than this candle, and so on. It only looks small now because of the big move. But notice that by where I enter on the trend, the move hasn't exploded yet into its full capacity. So you're getting in when things are developing in trendy markets like the currencies and natural gas. When you try to do it in gold, it doesn't give you always that opportunity to get in on the developing part. Usually when you try to get in gold, you end up in one of these bars. It explodes. The trends explode. And so you end up catching the time when you try to hit the buy on the ask or sell on the bid. Firstly, you can't even get in at a level 1. You usually have to click market order or buy on the ask for gold and crude oil. And you end up getting in at the high of the bar, and then the next bar, because the volatility is so great in those markets, the next bar drops 20 ticks before it takes off. So the risk is very, very high. The only way you can really trade gold and crude oil on the trend is if you focus on a trend line cross, not the bar. That's the difference. So you're going to have to play with that. I like the currencies and natural gas for trend trading because they develop slowly, and then they explode and they go on forever most of the time. And they don't, you know, you can see the retracement. Where's my retracement? My retracement is still miles ahead of my entry. In gold, if you happen to get in on the high of the bar here, your retracement would actually come down to your entry position, and you could actually be in a losing trade. So the volatility is very different and how the strategies play out. So I would prefer you focus on counter trading in those markets and focus on the currencies and natural gas for trending. What is a good indicator that shows you that a market will be flat that day? Oh, that's a loaded question. It's not really one indicator. You have to look at the moving averages on the higher time frame. You have to look at the 15-minute. It's all about the algorithm of the market. I cover that in my algorithm class, and we will get to that. But you can also use your Segredo to answer that question. You can use the size of the histograms, how small they are, if you get a lot of onesies and twosies in a row. You know, it's a loaded question. It's not a single indicator. It's a number of things. I wish it were that simple, but it's not. Listed on higher time frames, exactly. It's the positioning of the moving averages. Because notice, if you look at the 15-minute chart, can you see the spread on these moving averages? Now, if we go to something like this, can you see these moving averages here? at 1800 the day before, these moving averages are flat. So if you go to 1800 yesterday, can you see? Market's flat. So it's all about the trajectory of the moving averages, and you can see it better based on your 15-minute chart. We're in a sandwich. There's no real trajectory of the 13. The 13 is a, there's, it's a, it's sandwiching into the other moving averages. Whereas here, look, we're at 70 degrees. There's a nice fan developing. So it's all about the position of the moving averages to give you the trajectory of the trend. Best market for reversal. I don't want to talk about reversals today so much because I covered that last week, but we'll get to that. Let's move on to the next trade here. It's coming up at now. The reason I'm going to show you this trade really quickly is because it's part of the universal alignment, but it's not the beginning of the explosion. So you're not going to get your 40 tick move. You're not going to make another 500 bucks on this next part. So you got to remember that the beginning of the big bang, if I want to call it, for the alignment is always going to give you your 40 tick moves. Maybe 70 ticks, It may be 20 ticks. But that's where you're going to get most of your price action, where everything explodes across the time frames. Can you see? Touching candle, touching candle, touching candle, touching candle. They're all the same. They're all exploded, and they all look exactly the same. Now, this next one is the continuation of the trend after we completed our little gap close, which is called a retracement. And you will notice that if we look at our 15-minute Segredo, what time is it now? We're at 2:21. If we look at our Segredo, we're coming to, we're still on a number 4, coming to number 5, right? So we haven't hit a number 7 or Christmas yet, according to our 15-minute chart. So you can look at your 15-minute chart and say we're still green on green. So there's still more price action to be traded. You can look at your lower time frame to get the exact timing. So now we're at, what are we, 222? And 222, we're at some Christmas. So we're not ready to enter yet. So we're going to be watching our Segredo here, and we're going to be watching for when is our next opportunity to go for the trend. Because at this point, the fact that my 15-minute is still so green on green, I'm not really interested in going short, especially when we're above the R4. Just because you're at the R4, guys, be very careful here. Don't just think the market's going to come down now because it hit a level. When they're up at the R4, they like to continue up. They can go much higher than the R4. They can go 70 ticks above, as the gentleman said earlier. So you don't know when that momentum's over. So this is where using the Segredo is very helpful, and you want to pay attention. Notice on your 1-minute chart you have a runaway stow here, going short. So that's an indication that things could turn right back around. I'm going to leave the 15-minute here in the corner so you can see. So we're going from a 4, green on green, to number 5 according to the 15-minute chart. There's no sign of Christmas. It's a nice big green red bar in the oscillator. So the trend's not over. I'm not looking to go short. Now I'm looking for my clear trade criteria. Notice I got a touching candle on my 1-minute chart. Look, there's my stow 20 turning around. Notice that my other stows are at the top. At this point, I'm not paying attention to them. Here, I got my green candle. This is still green. This is still green. So I'm going to be looking for my criteria to jump in on here. And I'm going to do the same 2 contracts as I did before. Notice the degrees factor. We're at 23 degrees, 48 degrees, 58 degrees, 71 degrees. So we're in very good position. Now I'm watching my Segredo, and I'm going to get a 1 at 224. which we already passed, and a number 2 at green on green at 227, because the 1 was Christmas. So this next bar coming in, according to my Segredo, I'll be looking to get in on. So we'll watch it as it develops. And again, I can use my buy on the ask position. Do you still allow email questions? Yes. Can you talk about the volume level for trend trading? Well, volume is hard to say. You know, obviously, because of the HFT coming into the market sporadically, it's going to influence the volume. You're going to get, you know, your block traders coming in with their thing. So I don't really focus on volume so much. I look more for momentum. I think momentum is a better measuring stick than volume. And also, like markets like natural gas, they don't have a lot of traders in that market compared to something like the S&P 500 or, you know, even the euro. Look, we've got supposedly, you know, 800 on that side and supposedly, you know, 700 on this side. So we don't. So I look for momentum and the size of the bars as well. Like something like this. This is a good size candle coming in. Green on green, green on green. And if I'm following my Segredo, what candle we're on now? 228. So we're going here between, this is where my green on green. So I'm going to buy on the ask here based on my number 3 of my Segredo, still green. But this time, watch here. Notice how close the fractal is. The fractal is very, very close, right? And because we're at the, notice we've just crossing here in the 1-minute chart. This has been going a while. This is on the inside already on the 5-minute chart. I'm not going to expect a very big run. So what I'm going to do is I'm going to put my first contract at 3 ticks, and I'm going to put my second contract at 6 ticks, which I like to do. Or you can put it at 7 ticks if you want to get a nice even 10 ticks. You get 3 on the first position and 7 on the second position. Now, let me just speed it up here. I'm expecting some price action, but I'm not expecting another 40 or 40 tick move. Because why? Why am I not expecting another 40 tick move? Who can give me the answer? There, we just got our 3 ticks. See, now we're at the high. When you see the high like this, it's sometimes better, rather than waiting for it to go up, I can always take less. I can always get out because we're at the high in case it turns around. But why would I not expect a huge amount of price on this move? You've had the strong run up, fractals, resistance, and the R4 middle of the party. Exactly. If you look at your 15-minute chart, notice that we're already past the R4. We're already at this fractal here. We're probably going to get a circle with a dot momentarily. We're at a pivot. The dotted line is an intraday pivot. The same with our 5-minute. Notice that our 5-minute, we're at the fractals already. We passed a very strong level, the R4. Okay. And notice here on our 3-minute, we're at the fractal. We're at the pivot. And you can see these green fractals are very close to the price. So it tells you we're trading at the high of the high of the high. We're stealing ticks on the remaining part of the trend. We're not at the beginning of the trend. If you're at the beginning of the touching candle part, per the 15-minute chart, where we're trading on the number 2, that is very different than trading matchy across the board when you're trading at number 5, when you're trading at the high. Can you see that this is still matchy? Touching candle, green candle, green candle, green. The moving averages are all the same. It's still matchy, but it is not the beginning. It's not the ultimate universal alignment. It's not the beginning of the move. And what tells you that? The 15-minute chart. Can you see the first trade was touching at the beginning of the move, and the Segretter told you we were at number 2. 145 was the beginning of the trend. And where we're trading right now is at number 5. So we're now approaching very close to 7. And it sometimes doesn't make it to 7. It could turn Christmas early, as you can see. So just as well, I move my target, and that's where I use my high markers. I saw I wasn't going to get my 7 ticks, so I moved it down 1 tick below the high of the day, because there's a bounce there. Look, the circle where the dot came in, boom, and the price turned around. Very important to distinguish the difference in the types of matchy. But was I able still to make some extra ticks? Of course, trading on the trend, but it's not always going to be a 40-tick move. Party too far gone, yes, but I'm still trading green on green, so I'm still making price. And the 3-minute is helping you to gauge the timing, getting in on number 1, number 2, and notice that I'm out by 4, turning to Christmas, number 5. Okay, so we have a few minutes left. Let's do the fake out. Okay, let's talk about the floors. That's coming next. So now that we've done the perfect trade, you know, the perfect trend trade, and we've done a not so perfect trend trade, let's do what a fake out looks like. Okay, so here we are. Now watch here. We've got another green touching candle. Another green touching candle. And if I look at my my 1 minute's not showing that yet. Oh, can't use that. If I was just trading my ninja chart, I'll show you in just a second here. Let's see here. Yeah, my 1 minute chart doesn't go back that far. Up. No. Can't show you on the Segretter 1 minute. But notice I have a green candle here. On your 1 minute touching candle, you might get what looks like another touching candle opportunity. So you might decide to go in and buy here based on your 1 minute green candle coming in, and watch here. I'm in a little early. I was actually going to wait for the next bar. I'm going to speed it up here for you just so you can see. Notice that it's gone green and immediately to red. So now we're in a losing trade, right? We're clearly in a losing trade. We had a touching candle, we thought it was going to go up, and now it turns around and goes into a reversal. And you may even get a spike and be able to steal a couple of ticks there, or 3 ticks. This is what I call the last beer drinker before we go home. The last beer drinker before we go home. This is where sometimes the HFTs come in with a nice momentum. That one's not a good example, but it's an example. Sometimes they'll come with nice momentum and you get sucked in there because you were successful here, you were successful there, and now you want to do one more just to go from $190 to $200, right? Because you only took 3 ticks here and you took 3 ticks there, and you want that one more trade, and guess what? Now you just lost all your profit. And you don't know if it's going to bounce on the 50, is it going to go low to the 200, and so now you're thinking about it, and then suddenly what happens is, guess what? Most of the time, momentum comes in, and they cross the 50. Let's see if they'll do it now. and they drop to the 100 and you just lost all your $190. How many times has this happened to people trying to do trend trading? Can you guys hear me? Too many times. There's the big bar. Now you just lost your $200 because now the trend is starting. Yep. Okay. And deal besides entry. So I always say for trend trading, there's always on every mini trend, there's going to get lots of mini trends throughout the day. There's always two really good moves that you can grab. You may miss the first one, you get the second one. You may get the first one, miss the miss the second one. But never go for the third one unless you're really sure that the trend is continuing. And the fact that we're above the R4, we already had all this momentum, and our Segredo is telling us we're ready for a counter trend, you should not be suckered into any candle. If you happen to not have Segredo and you're using Ninja, and the question that just came up is, when do you get out? Okay, don't wait for the momentum to come in. If you see that you immediately not in profit, and you see that your HMA is red, it hasn't changed to green. If you see that, worst case scenario, if you see that your 13 crosses your 20 on your trend, any trendy market, you should get out. Never trade through the 13 and 20 crosses on a trendy market, because if it goes short, it can go, it can go, it can go. That's the thing about trendy markets. I'm going to speed this up so you can see this. If it chooses a direction, it keeps going in the direction until it decides it cannot go anymore. Do not bank on the fact that it's going to turn right back around. Okay, it's no guarantee that the market is going to turn right back around. Okay, it can go lower and lower and lower and lower. So never trade past the 13 and 20 crosses in trendy markets as your risk. Now, look, I really am losing all my profits. Look how far it's dropping. Never go on hopium. And then you start to do the crazy things like doubling up. You know, you buy another contract hoping it's going to turn around here, then it goes lower. Now you're doubling your losses and all this kind of crazy stuff. So just take a small loss and then look for the next trend. Rather you take a small loss here, hit the close button at the top, keep majority of your profits, and then get in on the next trend opportunity going short. Remember, you don't have to do trend, counter trend, trend, counter trend. You can just do trend, trend, wait for the next trend short in the opposite direction, which came in here at the cross of the 50 with the CT. And at that particular point, our Segredo said, red number 1, what time is this? 3 o'clock. Red number 1 with a red on red. So just trade the trend short. Is that clear? I didn't set up a safety stop. No, you know what? Because I'm not using the ATM strategies, which will set up the stop for you, I need my center wheel of my mouse, and I didn't do it for this demonstration. You can put your safety stop there. I just haven't done it. But I just wanted to show you, you know, what you should be looking at in trendy markets. Okay, so we're out of time here. I want to do one more. Let me just see here which one I wanted to do. Maybe I should do the news. Let me do the news item. Let me do the news item for you really quick, and then I'll wrap it up for you. Did you have matchy-matchy on at least 2 charts on that reversal trend down? Yes. That's a good question. Here's my 3-minute chart. Can you see it coming down? Can you see my 3-minute chart? Now, oh, I know what I'm going to do. I want to end off with this trade really quickly. I want to do this trade at 325. Let's go back to this here at 315 actually. This is I wanted to do this, clear up this confusion. If you guys can just stay 15 more minutes with me. What is the best time trading market if you cannot be up in the middle of the night for euro? You don't have to be up in the middle of the night. You're going to see at 9 o'clock there's some very nice trendy moves. Okay, so here's the 3-minute and the now notice that the 50-minute, let's look at the 15, 3 and 1 for a second. Notice that the 15-minute is not matching moving averages wise. Can you see that the 15-minute moving averages are still pointing up? We've only got the HMA that's turned red, and we've got a red candle here. Can you see that? So this is not the universal alignment where all the stars align it, but we have sufficient matchy-matchy on the lower time frames. Notice here that the 1-minute chart has got 3 or more moving averages. Now I'm going to go in here short for 2 contracts. Notice that the 3-minute, you'll see in a second, is going to be crossing your 50. It's the 1-minute HMA is just turned red, as you can see there, and your 3-minute is also just turned red. Your 5-minute is crossing, so it's giving you a reversal, but it's a red candle nonetheless. And your 15-minute is a red candle, and it's closing the gap with the HMA red. So we've got, so basically the short-term trend lines are matching. Not all the long-term trend lines are matching. The HMAs and Linregs are matching. See, the Linreg 9 is matching the Linreg 9, it's matching the Linreg 9, it's matching the Linreg 9. The HMAs are all the same red color. But the moving averages are not matching across the board. The 1 minute's moving averages do not look like the 15 minutes moving averages. This is still matchy-matchy. You can still make a successful clear trade short. However, you may not get your 40-tick run out of it. Okay, you may only just get a nice comfortable 10 ticks. So let's watch this as it develops, and I'm going to show you another 2. I'm going to show you whether you can get baked out in the scenario and how you can tell the difference. Now watch, your momentum's coming in. So we are matchy-matchy, but we're trading the higher time frame color bar with short-term trend lines. We're not trading the whole universal alignment. And we're trading the trend criteria on the lower time frames. So we're matching color bar wise. Everybody clear on that? Because I know a lot of people get confused with this. R4, I might have waited. No, look at your 1-minute chart. We crossed below the R4. The 13 is already resistance. It's dark green. So there we just got our 3 ticks. Okay, we just hit the first fractal here, the red fractal. We landed on the 50 moving average. Now, here's a very, very important question. I'm going to move this down a little bit lower because I don't want to get out just yet. Now we're at the 200. This is a very good place to exit. And now this is the golden question I always get a lot from traders. They always ask me, what should we do with the 200? I see that the price goes through it. Well, here's the golden rule. If you're not sure and you're at the 200, just exit the trade. And if you're not in the trade, you don't want to get in on the 200. You rather want to be in this position like I am, where you're already in profit and you're trading through the 200. Okay? If you're going to trade through the 200. So you rather want to be in this position. There, I just made some extra money off of it, and it's still going through. And then invariably I get the question, well, how do you know you're going to go through the 200? Well, let's compare this quickly to the Segredo. as you can see here, if we look at our 1 minute chart, 3:31, we now hit the number 7. So what time is this bar? 3:30. So this red bar is a number 6 on the 1 minute chart. So if we were going to do the alignment per our Segredo, I'm going to do this so you can see all three. You can see that at 3:30 we're at a number 6. So we're going to number 7. 7 will be a great place to exit at 3:31. So 6 or 7 would be, I could continue through the 200 based on the Segredo being red on red, and it hasn't reached number 7. That could be my decision maker. If I look at my 15-minute chart at 3:30, what do I see at 3:30? On my 15-minute chart, what number are we? We are at a number 2. So I didn't get out at the 200 because we're going from a number 1 with the blue bar to a number 2 per my 15-minute chart. If I look at my medium-term Segredo, what do I see? I see that we went a very nice downtrend, red on red, 321 all the way down to 330. We're at a number 4, red on red. So the fact that I have this alignment per the Segredo, where I'm at a number 2, going to a number 2 on the 15-minute chart, and I'm still on a very strong trend, red on the 3-minute chart, and my 1 minute hasn't reached number 7 yet, still on a strong trend. That is a good reason that you can pretty much say there's an alignment, there's enough strong traders in the market that are going to plow through that 200. And because I'm already in the trade making profit, I can take the chance to go through it. That's the only time I would say you would do that. I wouldn't encourage you, if you missed the entry point, to jump in on the 200. And so I'll compare when this doesn't work. Let's compare the fake out to this going through the 200, because I get this question a lot. So I'm going to quickly move forward, and this will be my last trade for you, to also the 13, the MAs are jamming the price down. Exactly. Notice that the 13 is crossing the 200. But again, what we're really looking at, oh, what's going on here? Specify, go to the, oh, okay. Sorry. Oh, that's why. Sorry, I can't talk and type at the same time. Give me a second here. What we're looking for is alignment. We're looking for strong agreement, and so you can break a couple of rules on the trend as long as you have strong agreement. That's the message here. Now let's go to the 1300, where we're in the same position. Yeah, we are. You probably get in here thinking you're going to go through 200. Maybe you miss your entry point, and you think, oh, look, you know, my 3-minute is matchy-matchy, and you think, oh, look, my 5-minute is matchy-matchy. I got red on red on red, and maybe you get in, or you get in a little late, and what happens? The price turns on you. It's not profitable. So and this is why trading on the 200 is so dangerous, because sometimes it works and sometimes it doesn't. And what's the difference between this alignment what's the difference between this alignment and the alignment we just did over here at 3:30 in the morning? What's the difference? The difference is this. If we look at our Segredo, notice that we're on a number 1, number 2, right? At 3:30. If I go forward, okay, to the 1300 block, you will see that, sorry, let me just line it up so you can see it. 1310. You will see that we're not in alignment. Can you see that we're Christmas? Even though we have a number 2 at the top, right? The HMH is crossing. Look at the bottom. The bottom of the histogram is green bars. It's not blue on blue. It's not red numbers with blue bars or red numbers with red bars. It's green. It's completely the opposite. The bottom here is showing uptrend and the top is showing some red bars. So the trend is not in alignment per the 15-minute chart. The 15-minute chart is showing you Christmas. It's out of sync. It's contradiction. So this crossing the 200 is not the same as the other crossing of the 200 per the 15-minute chart. It's not the same. If we look at 3:30 here, we're clearly in sync. Blue bar with the red number, red bar, the HMA is already crossed, whereas over here, we're green bars, it's Christmas. So you can really use that Christmas factor where it's out of sync. It's not red on red or green on green. They're contradicting each other. The oscillator is contradicting with the top to tell you there isn't majority traders trading in that direction. There's only a handful of traders. And using the 15-minute chart and lower can really help you with that. If I compare the 3-minute chart, and this is where you can run into trouble on the Ninja, which is why the Segredo helps you so much, is because the Ninja, when you compare apples to apples, they look the same. Right side of the edge, 1300 hours looks the same as 3:30. It all looks the same on a Ninja chart. And that's the advantage of the numerical system, that takes away that confusion from the Ninja indicators. And that was the reason for the development, because you try to follow rules, but you can't always keep them the same. And if you look here at we were on our 3-minute chart, we're already at a number 7. By 1306, we're already at a number 7. Okay, so you're trading in the later part of the move. That's when you should be exiting. So the fact that you're at 7 already going into Christmas, the fact that your 50-minute is Christmas is telling you that the trend is over. Is that clear? Take us to the promised land. So in closing, what you want to do is make sure that you trade with the 50-minute on a number 1, on a number 2 for your best alignments, making sure that you red on red or green on green, okay, or blue bars with red numbers or yellow bars with green numbers. You want to make sure, if you want to find your best opportunities, that you have matchy-matchy across the board. And if you see that your 15-minute, as we saw here at 145, is matching your lower time frames, and you can have a 1 and a 3 and a 15-minute chart working together, or you can have 1 and a 5, or you can just have a 3 and a 15-minute. Any combination will do fine, but as long as you see this arrangement where they all look the same, you have yourself a universal alignment. If they match moving averages along with your short-term trend lines, then expect a nice strong move. If it's only the lower time frames are giving you a trend opportunity, as we see here, maybe matching a 3-minute chart going into a developing trend, but your higher time frame says you're in a counter trend, but the color of the bars are red, you still have matchy-matchy, but it's only some of the stars. It's not a universal alignment. So expect the move to be shorter lived. You may only make 10 ticks or less on the entry to exit point per your lower time frame. So understand the difference between a universal alignment where you can go for a really nice run, and at that point I will be paying attention to Christmas or the number 7 showing up on my Segredo, and I'll be paying attention to the HMA color changes and any support point like another moving average. So I hope that was clear, and remember, avoid fake outs by following your Segredo numerical system, and never trade against your HMA and your 13 and 20 crosses. Never trade contradictory to those directions. If your 13 is crossing short and you're trying to go long, you exit at all costs. Just take a small hit and you can always get back in. But never ride out a trend trade against the 13 and 20 cross. You're committing suicide in trendy markets. It's absolute suicide. Especially if you see it change to dark color. Don't assume that it will turn back around. Don't assume that. It's better that you exit and then get back in. And that's all we have time for. Are there any last questions, and I have to let you go? Can I see your 15-minute chart looked like at 3:30?